Good morning, everybody. It's Gil here. It's 8:31. We're a little bit late this morning, Pacific time. Dr. K, you're with us here.
And with you.
Okay, so everybody hear me fine? Yes, very good. Okay, and everybody sees my screen just fine. Okay, what do we got going on here? Well, the market's coming off, and it looks scary, and some stocks have been coming off, but also some leading stocks have held up okay. I mean, if you look at this index, you're in a position to come off here. So you get a couple of days. You stalled out on Tuesday, and then yesterday you pick up some pretty sharp volume on the downside. You kind of close off the lows, though, so there is a bid under there, at least temporarily. Today we're coming down again, and you're coming down into this little area of congestion. You found supporter at the 3050 level on NASDAQ before. Maybe you pull down to there. I'm inclined, though, to think that they're trying to take your stock again. I don't know why, mainly because I guess I don't see a lot of things that look shortable, and oftentimes, based on my work on the short side, you'll see when the market tops, and in fact, a lot of times you'll see some leaders top before the market does, and some will be in breakdown mode where you'll see them in head and shoulders formations or late stage failed bases, and they look pretty nasty. And they definitely look like short sale setups. As I scan the market here, I don't see any real short sale setups, so it's not necessarily clear to me that you need to be running for the hills necessarily. I do think you watch your stocks and see how things act. Stick to your selling guides, but you can see the NASDAQ come down to fill this gap. Maybe that's what it does. There's one bit of news that might cause some sort of a bounce back in the market, which is a Supreme Court hearing the Obamacare case, and it's possible that if they came out and rejected that entire bill, based on their decision, that could spark a market rally that might be pretty sharp to the upside, because it might signal the end of Obamacare and just the whole Obama approach to the economy and burdening the economy with regulations that really don't help to produce growth. So what would be interesting is that if that occurs, to see how the market rallies. But for now, all we know for sure is we're coming off a couple days off the peak. You're running again, I think. Are we running higher volume, Dr. K?
Slightly 5% higher on the Nasdaq,
No,
and
actually, it's now
5%
dropped to low.
about 5% lower on the Nasdaq,
Yeah.
about 6% higher on the S&P.
Yeah, so you can see that you're not seeing a big pickup, but the market's coming in and it looks scary, but I think you just got to watch your stocks. Now, here we have InventSense, which has been one of our favorite stocks, but the thing to keep in mind with InventSense here is if the way you would handle this is how I handled it. If you bought stock here on this pocket pivot and it can't hold the 10-day, to me, the pocket pivot should indicate strength, and it should continue at least, even if you have a pullback for a couple days, it should be able to come out there and go higher. Instead, what it does is bust the 10-day. So for me, that's a reason to cut back on the position, and then what you're looking to do is it comes down into this area, this little basing area, and it finds support where it tends to, which is the 50-day moving average. It did last time. And even before that, you might say that it was not violating the 20-day, although it violates the 10-day pretty regularly. So the one thing you know for sure is that the stock tends to follow the 50-day. So you're using the 50-day moving average as your selling guide. So in this case, you're bouncing off the 50-day on above average volume so far this morning, and you're actually on track. Am I getting this right, Dr. K? It looks to me like, let's say we stayed at this pace, you might actually exceed yesterday's volume at the current
Uh,
pace.
Unlikely. It's unlikely simply because,
Unlikely?
yeah, it's unlikely that I know at the time and day we've been 2 hours into the trade.
Yeah.
If we were to exceed yesterday's volume, well, the odds are very low, first of all. But if that does happen, generally, I wouldn't be surprised to see a mid-bar close today, which
Hmm.
would be a sign of strength, a sign of support. And while it wouldn't be a pocket pivot if it closes lower than yesterday's close, it could potentially be bought or at least bought tomorrow, close
Yeah.
to the open.
So I mean,
So
so
I'm
you,
looking
in a
for that.
sense, the stock is kind of doing what it's entitled to do. I do think though that it fails here, and that tells you that it's lost some momentum. So if you bought shares here, those I'd be cutting back, and we did exactly that. And even in my personal account, I'm very aggressive there. I'll have a big position, 75, 100%. I'll sometimes just blow the whole thing out if it can't hold the 10-day, and I actually did do that in that particular account. It's an aggressive account. And the idea I'm buying back today, which I was doing. So we'll see if that holds up. But so far that's kind of what we're seeing here. So during a bull run, you will have to have a few pullbacks, and they will seem hairy at times. It'll be interesting to see if this turns into something that generates some sort of neutral cash signal or sell signal. You don't see that happening anytime soon, though, right, Dr. K?
No, we're at right now we're at three. Let's see, we've got 3 distribution days on the Nasdaq in the count.
Okay. Oh, somebody's mentioning the Supreme Court decision doesn't come till June. Okay. I thought I heard on the news yesterday that they were going to hear arguments and then come out with their decision. So the market doesn't have that potential catalyst, so we can take that out of the picture. So so there may not be a rally here or actually see how this pullback occurs. So I just think you have to take it all on its face. I just thought that if you had some news and you had a news pop, a lot of times a news pop is an alibi to lift the market, and in the process what happens is the smart money sells into it. So the market's starting to show some distribution, then you get a news rally, then you'll see institutions sell into that news rally, and so the market kind of flakes out on that basis, and so that's kind of where you're getting a sign that maybe this market isn't as strong as it should be at this point. Anyway, so that's really the deal there. Let's see some other stocks. LinkedIn. It's on the pullback. You got lighter volume today, so it's pulling back down towards the gap up move, and it just might be coming in. I see volume is running slightly above average 10% right now, but I'm not sure if that's really a reason to unload the stock. I think it should hold the low of the gap up day. On the S&P, something to note, we should probably take a look at this. It's been up, and it's pulling back down into this area. So this all looks normal so far. It's just a question of whether the selling picks up and the market really starts to get clocked here. So I think that's kind of the issue. If you see some bigger distribution, we start to break down, then maybe you're heading for the 50-day here, and I guess, I don't know if the 20-day is really relevant, but probably this 30-50 low. So just got to keep an eye on it and keep an eye on your stocks. Let's see, I think, do we want to go through some stocks, or would we rather answer or ask some questions and just do that? What do you think? Everybody want to just answer questions or ask questions? Let's do that. If something comes up, we'll talk about it. Let's see. And somebody else says, I thought Supreme Court was supposed to decide today on Obamacare. That's what I thought too. So I guess, there's different answers. Does it really matter? We'll just watch the market. But I think the key is if some news like that or any other news that may be positive, maybe Spain suddenly finds out they have a cache of olives or something. Spain is actually the world's largest exporter of olives. It's not Greece. It's actually Spain. So maybe they finally have a cache of olives and they can pay off their debts. Anyways, so we'll see. I don't know. Someone can confirm it. Dr. K, do you have any idea on that?
I'm just looking at it now. It says that there's 3 days of historic hearings that started on 27th, so they end today. That might be where the confusion's coming in, because they end today, but that doesn't mean that there's going to be the actual decision comes, it's expected by June, so there's not going to be any material decision made today.
Okay. So it's not going to be a factor then. But, if there was some news. Tango, why so much volume today? Because they priced their secondary offering 8 million shares, priced at $18.50. Stock's been acting well. I mean, even yesterday traded above average volume. You get support down on this 18 level. It's still acting fine. Viable on the basis of this pocket pivot here. And then today, I guess, not a pocket pivot, but it's actually up on the day. This shows it as red because it's trading below where it opened. But in any case, that one's acting fine. So again, there are stocks that are acting fine, and that's one of them. Okay, Ross tells me he's on the call here. Generally doesn't want to talk though. Solar Winds. I don't really like this sloppy breakdown. You get a pocket pivot here, another big volume breakout, and then it just comes in like that. To me, that's pretty sloppy. Dr. K, how would you handle this one?
Well, it's gone back into its basing pattern. I just hate seeing that because that tells me that it might be slumping around for a while. It went back to its 50 but didn't quite touch it. If you're sitting on the position, if you bought the pocket pivots, my inclination would be to sell it. Sell it yesterday actually, because it went all the way back down to 38.
38, yeah. And we did have like a 10% position in that. We just blew it out. We bought it, I think, in here on this basis, right in here. So just tiny loss. I'm not going to let that. We're not going to let that sit there too much. How much emphasis or how much weight do you guys place on the S&P having 5 or so distribution days versus the NAS at only 2 or 3? Does that matter, Dr. K?
When it comes to distribution days, I'm looking at the NASDAQ composite. I'm not looking at the
Only.
S&P.
Yeah.
Right.
And what's your and
He
so
has
what?
all signals over the years because it's a sloppier index, and so
Right.
just the Nasdaq seems to hold true, even in a year like 2011. It was still a nice guide. But that said, in our book we talked about some of the general rules about distribution days and the distribution day count, but those can be overridden by unusual times like quantitative easing. And since the model does take that into account, the quantitative easing aspect, that doesn't mean you have to have 5 distribution days. For the model to go into a sell signal standby. That doesn't mean it'll automatically go to a sell signal just because you get 6 distribution days clustered together. But those are general guideline rules. They do apply to more normal environments, and even in the current environment, they still provide a framework and structure for how to sense what the model's about to do.
Okay, I hope that answers that question. Opinion on Apple. We have no opinion. There is no opinion. I don't know how long you've been watching these webinars, but opinions are like, what? Everybody's got one. All you need to know on Apple, okay, and if you own Apple, this is all you need to worry about, okay? You don't need to worry about somebody else's opinion like ours. You don't need to worry about what somebody else has to say or some analyst or your friend or whoever. All you know about Apple and all you need to know about Apple right now is that it has followed the 10-day moving average without violating it. This is not a violation. This is not a violation. All the way up, and it's been doing it for about 12, almost 13 weeks now. So what do you know? You're using the 7-week rule, and now a violation of the 10-day moving average would be your selling signal. That's all you need to know. So until it does that, you can hold it. The stock coming in, I mean, look at the chart. Does that look like much? I think everybody should have live daily charts. If you have eSignal like we do, which we're using here, these are live charts, and for the most part, I think you get a good view because it's moving in real time. So when you see something happen in the stock, and I even say, with INVN, I'm looking at this thing this morning, and we do have a core position, Dr. K and I, and so I'm watching come out and say, okay, it's coming right to where it should be. I should be buying shares probably, and of course that does turn out to be the case, and the stock bounces and comes up. So you can actually see within the context of what's going on. The last couple, 3 days is kind of entitled to that, but like I said, you wouldn't take action if you bought shares on this pocket pivot. Now, you can just look at Apple, and first of all, even though today's price move is a few bucks, I don't know, what is it, 6 points or something, I don't know, but it looks like a lot of points. Yeah, but percentage-wise, what is it? It's not doing much anything. It's actually sitting on top of this little area, this little flag, this 1, 2, 3, 4, 5-day flag, 4-day flag that it came out of a few days ago to new highs, and now it's pulling back, and I don't know what's volume looking like. Running heavy right now.
You're just 30% over.
Yeah, it's kind of holding tight. It's kind of sitting there mid-bar. I don't see any problem, but like I said, all you need to know is if and when it breaks the 10-day moving average and violates it, okay, and closes below it, and then there's a subsequent day where it moves below the intraday low on the first day it closes. So, for example, even though this is a close here below the 10-day moving average, it never goes below the intraday low of that. So there's never a violation of the 10-day moving average all the way up. So that's all you need to know. So no need for opinions. Remove that word from your investment vocabulary. Opinion has no place in the investment process. Did you comment on the MDM, Dr. K? Was there any comment? You're in a buy signal. That's pretty much it.
Yeah, we're in an uptrend.
I'm getting a bunch of IMs. Supreme Court never makes a quick decision. So like you said, it's going to take some time. SLXP, Salix broke out and it's holding the top. It acts fine. It's holding the breakout, and it got some support yesterday. You can see volume picked up. Or wait a minute. You know what? That's wrong. Time out. Wrong chart. Volume did not pick up, but it did close up off its lows, and it's holding fine. So it acts well. Almost looks viable right here. I don't know. I mean, some of these things look viable to me, and I was buying some stock this morning. KORS cores. I think this thing's just building a tight flag, base. Its first real base. Really, this is a 1, 2, 3. We saw the pocket pivots. Would you consider this a flag? I don't know, but we didn't really have to label the base. You had pocket pivots in here when it started the run, viable gap up here. So, and this is, I want to emphasize again, one of the things that I think is very powerful about pocket pivots and Bible gap ups is you can just buy stocks on the basis of those buy signals. You don't ever have to get into labeling bases. And I know we get emails about, is Envision or InventSense's chart, INVN, is its weekly chart a high tight flag? It's like, who cares? Why do I need to put a label on it? It's pretty irrelevant in terms of dealing with the stock in real time based on the actual price volume action that's right in front of your face. So trying to give the base a label doesn't really help the process in our view, and a lot of times it can simply hinder the process because you'll get obsessed with whether a base fits a template, right, Dr. K?
Right. You want to keep it in context of what the general market's doing. So in other words, a stock could have an incredibly strong price volume action relative to the market, but that doesn't, if you try to label that kind of pattern that emerges and it doesn't correspond to any of the patterns in your neat notebook, then you might just shrug it off, when in reality that might be a very strong pattern to consider.
Yeah, and a lot of times the pocket pivots within a pattern tell you more about what's going on than anything else. So Michael Kors is in a 3-week base. Might be it's not really a high tight flag because the ranges are pretty loose. You want to see it be relatively tight. I know there's that old Syntex example of the high tight flag, and it doesn't look as that tight. It kind of makes a little U-turn type of maneuver, and so I would actually look for this to build a base. And this kind of reminds me, maybe some of you remember and some of you don't remember because you weren't around, but I remember 1991 when Marvel Comics came public, and I think that is in one of the O'Neill books somewhere. I know they've probably got a chart of that weekly somewhere. And I remember back in 1991 when they came public, the stock ran up and then it formed a nice sideways base. I think it was like 6 weeks or something like that. And then the thing launched and it looked like this. It had already had a big move up. It had doubled. And then it went sideways and built a base. This kind of reminds me of that, the way it's starting out and if it did build a base. So I think all you're doing now, if you own it from down lower, okay, you violated the 10 days, so you could be out and just holding your cash and hanging out and seeing, where the thing goes from here. So, to me, it looks okay. So it's kind of up to you, depending on where you own it. You could have sold it on the basis of a 10-day moving average violation, and you'd be out now, and probably out somewhere in here with profits, big profits, and now you can hang out and watch the thing. Now you're kind of coming below this low. I'd watch for some sort of undercut, or maybe the 50-day catches up to the stock. So let's see, SLXP. Somebody's asking, is the chart pattern a wedging pattern from the pocket pivot on 313 to 326? Wedging. Yeah, I think a little bit of an obsession with wedging. I mean, all this isn't really wedging. You have some above average volume, you have some average volume here. You pick up volume on the day out to new highs, but it's not above average, so it doesn't really hold up. That's not, I mean, you see this lower volume, I guess, from here to here, and you see this rising slightly. Is it wedging? Maybe a little bit, but is it a problem? Not really.
That's not a real wedge. I mean, wedges are much more noticeable. I mean, they just really look like they need to correct the wedge.
Yeah.
And this is more normal price action.
Yeah. So let's cover a couple others. SourceFire. Here's your Bible gap up. Stock has never really looked back. You're testing the 10-day moving average today, and you did yesterday. You held above it. Not sure where it's going here. It's a hold if you bought here. You have a pocket pivot. I don't know. That's a little bit extended. I don't know. It looks like the only place you really buy this one is on the Bible gap up, and there's been no other place to buy it. Your take on this, Dr. K?
Yeah, I wouldn't. I mean, it's got the Bible gap up, and then you just sit and hold it. Wait for the next pocket pivot if you want to add to this thing.
Yeah. F5. Don't really see anything wrong with F5 either. It's holding above the 10-day. There's no real signs of anything. I think at this point, it tends to show. It has a tendency to not hold the 10-day moving average, so you don't want to use that as your selling guide. Really, it looks like the 50-day comes into play, and that's coming up and catching up with the stock. So the last place for you to buy the stock would have been here. So if you're in on it here, you're still okay. So I don't really see an issue with this really at all. When INVN came into the 50-day, the last time it seemed more constructive to buy based on the lighter volume. Is it riskier to buy when it came into the 50-day today? There's no way to uh, create magnitudes of risk or something like something you're buying. If you have something pulling back to the 50-day moving average, a lot of times that can be a spot to pick up shares. So whether it's riskier here or riskier after it's done a secondary, because that's what happened here, I don't really think that's the issue. The issue is whether it holds the line and comes up off the line. So I don't really see it as being any different than that, and that there's no way to gauge when you're coming down to the 50-day. How do you know there's no risk or less risk here versus here? Don't really see how you would determine that. I really don't see how it's relevant either. So that's just my take. Dr. Canny, take on that?
It's your trading personality. Some people like to buy on weakness, and if you're buying within the guideline of the 50-day moving average, there's nothing wrong with taking some shares earlier today when it came very close to the 50-day. It's certainly one style of trade. I prefer to buy on strength. So in my case, I'd be buying on. I bought on March 7th, the day it had its secondary. And I also actually bought this one on March 6th, which is unusual for me because, like I said, I don't like to buy on weakness. But in this case, it looked to me like, first of all, it was going to price out. There was so much support given that it wasn't going through the 50-day. It wasn't undercutting it. So I figured, there's a lot of price support given the structure. So this would be a case where you step in and you say, okay, my normal rule is to buy on strength. But in this case, I'm going to take my initial position on weakness because it's right at so much support. And that gave me a lot more confidence to buy the next day in size when it had its secondary pricing.
Yeah. So that's kind of how you look at it. I know it's like you have some riskometer or something where you can gauge the risk. You're kind of basing it on certain considerations. Zynga and today's action. Zynga Dinga. Well, they did a secondary, so they priced it at $12. So if you got the secondary, you're up 38 cents. Could you try buying the stock here? I don't know. We'll see how it closes here. I might try nibbling on some shares here and see where it goes. But it seems to act pretty weakly. I mean, you're getting some volume today. They priced, 42 million shares or something like that into the market. I don't know. What's your take on this, Dr. K?
Yeah, I mean, I'm not. It's looking all right. It's got a lot of volume coming in right under the 50-day here, and I would just wait to see how it trades later today. If you really like this stock, because it does have an interesting story to it, you might take a small little position if it can close above the or at the 50-day moving average.
Yeah.
I'd be wary about these kinds of companies because there's been a number of these computer software gaming stocks. People probably remember NetEase and Sina and Sohu, and they did explosively well. But that was back in I think 2004, 2005. So the whole platform has become incredibly competitive. So unless Zynga has some way that makes them superior to all these competitors, I'd be very careful with a stock like this.
Yeah, and if you buy some, you can buy a few thousand shares. I mean, I'll do that. I did that this morning by a little bit here once they priced it and it started to come up. But we'll see. I mean, if it doesn't hold, say, the low of the day, I'll just blow it out, or even say 12. But I think the risk is minimal to take a small position here and see where it goes if you like it. I tend to like this story. I think the stock is building a base in here, and it can test this low, possibly, I guess, below 12, but we'll just see what happens. Right now, in the weekly chart, it doesn't look so great, but like I said, we'll have to see where this thing closes by the end of the day, and maybe you do get some movement here. The one good thing is that all of this overhead supply that was supposed to come out on the IPO share lockup expiration is now out of the way, and so that's probably, if it's going to do something, it's probably going to do it here. Maybe it hangs out for a little bit as the buyers are temporarily absorbed. So I'd watch and see how it holds up. But I don't imagine that you have a lot of people eager to sell the stock below $12 given the offering. So I think maybe you could undercut this low here. I don't know. We'll just see how this happens. But it's an interesting story. I think you just got to watch it. And yeah, if you want to take a small position here and test it out and see if it works, similar to what I'm doing today, but it's not big enough to really make that much of a difference. Just kind of nibbling. It's like putting a little bit of Zynga on a cracker and having a little taste there and see what happens. So far, not done too much taste there, I have to admit. USO, the oil fund, breaking down. Oil's breaking down here, so maybe that's a good sign for the economy. No, INVN is not restricted. Nobody said that. Alexion. We didn't like this. We had a position in it, only 10% from down lower, and we didn't like this, so we just kind of got rid of it. That's kind of bizarre. I'm not sure what's going on there, but I don't like it. And I think that when you see something doing that, and you have a stock breaking like that on huge volume, that probably tells you there's a big seller unloading a position. I didn't see any news. Did anybody else?
I didn't see any news on it, but yeah, that's just a very odd price volume action for a stock. It might be a big insider who maybe they heard something. Sometimes you'll see it on the tape.
Yeah, or a big fund
news. That something is not all well. So it's better, especially in this market environment, we have a lot of good stocks moving ahead to dump something like Alexion. That's not performing in that manner.
I noticed that Contrafund has had a big position in Alexion for a long time, and I could see them possibly kicking some out in here. And I know the guy who runs it, Will Danoff. Sometimes he just unloads stuff and unload a large position and then or a piece of it and then go away, and so the stock is able to jerk back up. So it might come back up, but kind of cheesy on the action here, I think. Not really what we want to see. So, and the stock's had a big run. Suppose a stock has a pocket pivot, and for the next several days stays within the range of the pocket pivot day. For how long is it still viable?
That's a condition of general market conditions. If your stock is, say, it, 2 or 3 days, if it hasn't moved in 2 or 3 days, I wouldn't be very concerned, because sometimes you got to give these things time. But if it were still at its pocket pivot price, say 7 or 8 or 9 trading days later, and you're in a bull market and the market's going higher and stocks are breaking out all over the place, I would not. My standard is to sell or at least sell half, especially if I'm near full margin and I need to make room for a new stock that looks potentially better. Then I will dump that one because it's not moving fast enough. So I'm constantly feeding my money into the fastest horses out there.
Awesome.
Now, if you flip that, if you have a weak market environment and the stock's not moving anywhere, but it's holding its ground, that's a sign of strength naturally. So you want to give even if the stock hasn't moved anywhere, say in 8 or 9 days, but you have a market that's on the weak side, I would hold on to that kind of stock because it's showing resistance against the declining market.
How much emphasis do you place on the Russell 2000 when it comes to the model?
Relative to divergences, we had the Russell show strength early this year and then show weakness. And that weakness was a pronounced diversion from the NASDAQ. But yet the NASDAQ continued to go higher, S&P as well. So, I mean, the divergences are taken into account by the model. They are weighed because you don't want to see divergences. They're generally a negative thing for the market. But ultimately, and the Russell 2000 is small cap based. So the model, the model seeks to do is on a buy signal, it will look at all these major indices and see which one looks like it's going to have the most gain based on that buy signal, and that's how we're going to make our recommendations in respect of ETFs. Obviously, on the flip side, if we have a divergence with the Russell 2000 not doing well, in our recent buy signal, we did not recommend the IWM or any of the neighboring Russell 2000 related ETFs, simply because it has been a lagging index.
Somebody's asking, I think we already talked about this, on your original entry at 50-day moving average at $15, are you adding in that account on this morning's hit of the 50 DMA?
No. I can speak, well, in terms of what I do, I didn't add to my position. I'm just sitting tight with my position. I thought about adding as it came down to the 50-day, but the reason I didn't was because my position size is substantial, and therefore I felt I'm perfectly fine with the size of INVN I have in my portfolio. But if someone, say, had a very light-weighted position, they could have used early today as an add point.
Yeah, and I actually came back into the stock myself, so and I just buy it if I think once it starts to show some lift off the 50-day with the volume up on the day. That to me, that's enough to come in because your stop is pretty tight. You kind of have to like that. I always like to trade where I have a close stop. Okay, we talked about could QE become the new normal? I don't know. It already is the new normal. That's my view. Dr. K, since the NYSE now contains leaders such as LinkedIn and InventSense, etc., distribution days on NYSE become relevant. It carries 7 distribution days so far. On the NYSE, what is that? The New York Composite? I don't know. Dr. You want to talk about that? I'm going to take a quick bathroom break. I'll be back in a minute.
Yeah, there's the market's always evolving, and so these indices also naturally evolve, but very slowly. And what I've observed way back in the let's just say prior to the 1990s, the S&P 500 was a very viable index in terms of distribution days and follow-through days. So that was used in conjunction with the NASDAQ. But what I found was the S&P was a pretty sloppy index afterwards. So if I just let go of the S&P in terms of distribution days, not follow-through days, but distribution days, and I found I could just use the NASDAQ, even going back to the inception of the NASDAQ in the 70s, the model would actually have fewer false signals as a result of just keeping it very clean. If you go back in time to the 1920s, 1930s, and you look at the Dow Jones, which existed then, and naturally these indices did not at the time, and used the model, the markets were quite clean back then relative to today's market. So the model did actually quite well. It's just using my distribution day, follow-through day rule on the Dow Jones Industrials back then. As we all know, this decade, things are a lot sloppier. 2011 represents the sloppiest year in the history of the NASDAQ in terms of volatility and trendlessness. As you know, we were very pleased that despite being tested as much as we were, the model was still able to finish the year ahead of the major averages. Now, the New York Stock Exchange, if that, that has some stocks that maybe are making more of a valid index, but that's something that might be worth studying. There's loads of research ideas out there, and I'm engaged typically in 3 to 4 studies simultaneously, and maybe that's one that I might consider in the future.
Yeah, the NYSE Composite, somebody's talking about, there's a lot of other types of stocks in here and a lot of stuffed stocks that have been getting stuffed lately. So I don't really look at that as being all that relevant myself. I think we stick to the NASDAQ because that's where the leaders are. And that's where there's more focus in terms of an index on those sorts of leaders rather than NYSE Composite is such a broad index. It's sometimes too broad, I think. Is that basically what you said, Dr. K?
Yeah, well, I mean, like I said, these indexes evolve, and if there's reason to believe an index might add some predictive value, then I certainly will take it under consideration. But yeah, I mean, looking more closely at this index, as I'm just looking here, an index that's too broad, and you could take one extreme like the Wilshire 5000, it's not going to be really helpful to the model at all. It'll just add noise.
Yeah, somebody's asking, how aggressive will PS Dude be getting back into INBN? Will he buy 10 to 20% positions on a pocket pivot and risk getting burned once again? I don't know, I really didn't get that burned. I don't know, we'll see what happens. But right now he's just hanging loose. He's 50% invested. So we'll see what happens. Like, you can't tell with him, it's like from one day to the next he can freak out about different things. So, we'll see what he ends up freaking out about later on. And sometimes that depends on what kind of emails we get. So, because we do kind of use him as a way, since we don't want to get involved in providing personal investment advice on demand when somebody emails us, what we do is if we get a certain number of emails regarding a stock doing something on a certain day, then we may, if we can, use Portfolio Simulator to illustrate what one might do in such a case. So let's see here. Watching the market here. I think the market looks okay. Doesn't look bad to me necessarily. I think the pullback's necessary if it's going to go higher. That's my tendency to think here, but we'll see. More questions. FIO, FIO's in a low base, so it runs up, got some pocket pivots, gets nailed here on some volume. Let's see. Wait a minute. Is this actually? You know what? I can't use this. I kept using the These are my index charts with index volume, and I'm over here looking at demos at their dailies. Let's look at FIO this way. Let's see. But here's your pocket pivot. Boom, comes in. So it's sitting on top of here. You know, if you feel like accumulating the stock, I guess you can, but it's going to be slower because it's lower in the pattern. So I'd rather be in stocks where you have less overhead and more potential for the stock to be able to cruise out of here. And you can see that when it tries to come up, you've got overhead on this left side of the pattern. It's pretty significant. A lot of volume up in here, so I would expect that resistance in this level, in the 32, 33, up to 34, I guess, level, probably is going to be solid for a while. You'd want to see it get through. I mean, there's no rush to have to buy it here, okay? I'd rather own stocks that are further up in their patterns. Expedia stinks. So that thing's a dog, big volume whacker. I mean, you're holding, if you're using the 50-day moving average as your selling guide, you're not blown out yet, but if it moves below the intraday low here, then I guess you are. So I'm not looking.
Yeah, on that FIO, I wanted to make
it's
a
a
comment.
laggard stock. You know, why own that when you can own this? That's what I would say.
Exactly, and we're in a trending environment, although it's a tricky trending environment. But nevertheless, the market has been in an uptrend, and in my studies going back over strong periods in the market, you never want to be in a stock like FIO, ever, because it will lag. Even if this thing gets beyond 34, don't let that tempt you into buying a position, because odds are so much against you that this will be lagging the faster names out there, and there are plenty of fast names in this kind of environment. They're tricky, though. Like I said, it's not your run-of-the-mill uptrending environment, as witnessed by market trend following, which are, I think, collectively down still for the year. So it's not your normal market environment. But besides that, even if the market were weak, even if there were very few stocks that were good out there right now, keep in mind that FIO has we're looking at three gap downs in the pattern. So that to me it puts it off my list completely.
Yeah. And and it may come around, but if you want to bet against those odds, I don't think you really have to. There's other things to be going after. Is today's Tango action very positive? Went up on, well, I think the fact that you have a secondary offering and it's priced at 18.50 and it's trading above the offering price, it's hard to view that as negative, right? So if it holds there, that's fine. The one thing is when they dump a bunch of shares in, at least in the short term, you've absorbed a lot of buying interest because a lot of the big institutions will come in and buy on the secondary, but they're not going to sell, so the thing doesn't come off much, but it doesn't necessarily have to take off. It may take a few days to go higher. So that's the thing with Zynga, is the same situation here. They priced a huge secondary at $12, 49 million shares, but on a dollar basis, not that much really. I think that it takes some time possibly to absorb it. Now, it doesn't mean that it just can't continue and break out here, but at this point I think you're looking at a base with a peak just under 20, and the breakout would be up to the peak of that. So that's kind of how I would be looking at it. Other than that, you're not in any position for a pocket pivot. Continuing with questions. I kind of like this where we just let you guys answer or ask questions. Red Hat, I mean, that's obviously a Bible gap up, and it's way extended though. So I'm not going to buy it. Cephate, I hate the stock because it shows a pocket pivot in here, and then it breaks down, and then you break out on not above average volume, but on decent volume, and then you come back in. So it's just really taking time to build a base, and a lot of stocks look like that. And it's probably a market question as well. You just don't have, the indexes are kind of taking a break, so some stocks will kind of mimic that. They won't get going, especially if they tend to be like this. But that's a big gap up. There's other things on the pattern. It's a little funky, so not one of my favorite biotechs. I think that, we've been patient. We have Biogen, and we've been buying it. I think last time we bought it was in here or on this pocket pivot or something like that. And we've been sitting, and now finally it breaks out, and it's actually acting very well. So you have to like the look of this stock currently, and it looks fine. So I would prefer something like this that's able to break out and hold a breakout versus, say, Cephate. Alexion, pronounced kind of off the table on this break. But you'll notice something about Alexion. It's tended to hold the 20-day moving average pretty well the whole way, but you notice that there also are no violations of the 10-day moving average. You close below, but you never move below here. You never move below this low here. Same thing here. Here you briefly get below it, so if you're allowing for some porosity and didn't really come through with the violation here, the same thing. But you'll notice it does tend to pull right back to the 20-day moving average. Not that that's anything that meaningful, but it could just build a base here. That's a possibility too. Radware, I don't know. Radware is kind of a laggard, I think. It's trying to come up. You're seeing the whole group coming up, so 79 relative strength. I don't know. I'm not that excited about it. There are other stocks that have to be.
Not a good pattern in this market environment. It's just, yeah, definitely a laggard pattern.
Somebody says, can you explain your sell rules for failed pocket pivots? I mean, come on, this is pretty obvious. I said earlier, if you have a pocket pivot on Friday, last Friday, as you did here, and it's a sign of strength, then my thesis is that the stock should continue higher or at least hold a little pullback on top of this range. If it can't hold, I blow that out. Simple enough. And if I own stock from down here off the 50-day, I could be holding that. But I figured, I call this intuition, call this sixth sense, or call it just plain luck, okay? I figured if it couldn't hold this the way it broke yesterday, it's heading for the 50-day. So I was looking to buy back at the 50-day, and lo and behold, I got it. Thank you, God. And I'm back into the stock here, and saved myself about 10-15% of a break here on the downside, maybe more. I don't know. But in any case, that's just how I handle it. Now somebody has it lower, and he may have held his core position or held all of it if he's giving it more room and he has a better cost basis. In another account we run together, we bought some in here, and we've been buying it, I guess, in here again. And we added a little here, and so when this fails, we sell what we bought here. So there's different ways, based on the different risk profiles of the different accounts we run, we handled it differently, and you would do the same thing. So again, it gets back to this whole idea that there is no one-size-fits-all. Everybody wants the black and white answer, but it depends. If you were, if you had big, well, we actually went to go see the new Cirque du Soleil show in Santa Monica that's titled Ovo, and it's a big egg, I guess, is the theme of it. And I guess one of the guys gets kicked in the you-know-what, and he says, "Oh, my ovos." So if you have big ovos and you bought some on this pocket pivot, and you can sit through this, and I guess you can do that if you want to. But that's not how I would do it in a very aggressive account with a big, big position. If you're running normal size stuff, I think you cut back on this just on the basis of this failure, and it will set up again, and you're not so top heavy. So that's kind of what I prefer to do. But again, it all comes down to your risk preferences. Not necessarily some one size fits all or some absolute method that means you'll never end up selling stock and having to buy it and not having to buy it back up higher. I like this pullback in Buffalo Wild Wings here. You had the Bible gap up. Stock's been very strong. Pulling down on light volume. I nibbled on a little bit of stock here myself, but I'm just kind of testing it out. We'll see how that goes. But you shouldn't take that as a sign to get all bullish and excited on the stock, as far as I'm concerned. So you want to chill out if that's what you're looking for. But I think if you're okay adding on a pullback like this on light volume, it can be done. But it could pull down and test these lows and not hold a 10-day. So what would you look for to buy Coors on new base, like we said? Somebody says, I bet Dr. K used to read X-Men. Is that true?
Actually, a good friend of mine, Brian Singer, is the one who directed X-Men 1 and 2, and he's a huge fan, obviously, of the X-Men series. But yeah, it's an interesting and mildly perceptive observation. I do support the whole series, and I think those movies are terrific, and not just because he's a friend of mine.
Yeah, my 10-year-old son loves them too, and I, of course, watch them. Do you agree the first 2 times to the 50-day are safest, if they hold? Dr. K, do you agree with that? First 2 pullbacks to the 50-day are the safest ones to buy into?
Yeah, I mean, I've noticed this. It's a subtle rule. If a stock hits the 50-day, the third time it hits the 50-day, and in other words, between the first, second, and third time, it hasn't really moved anywhere. It's almost like it keeps knocking on the 50-day. By that third time, it'll probably go right through it. So
Yeah,
that
true.
it's like the rule of three is kind of in effect
Yeah.
here. So yeah, I'd be wary about that kind of market action. But yeah, the first and second time, usually it's an okay place to buy, provided that the price volume action that's led to that bounce is also constructive.
Here's a good question for you. When the 50-day moving average is 20 to 25% below your buy point, when it take many weeks before it becomes a selling point? Uh, Not really, because you're talking about what buy point. This was a buy point. This is a buy point. I think we had another one. You could have treated this breakout as a buy point. So we already said if this is your buy point, I'm selling on the break of the 10-day moving average. The position we had was cut back on that, and we reverted back to a core position that has average cost based more on the purchases in this area. So no, that's not true. And it's not an example of that. It's an example of the fact that you have a pocket pivot. If you buy on that buy signal and it can't hold, then that would be a reason to back away. And it's doing what it needs to do at this point. So when was the last profitable MDM signal? It was like
This
what,
last last
5 years ago or something?
over the last three signals, the last two out of three signals have been profitable. So yeah, I mean, just go to the results page and take a look for yourself, how the model's done. And it's important to go to that results page to, if you haven't already, because it will familiarize yourself with the rhythm of the model. In other words, it had 5 successful models starting in August of 2011, that's very unusual for the model to do, to have 5 signals in a row that are all profitable. And then it had, I believe, 5 or 6 signals that were false, depending on which index you're looking at. And then it had a true signal starting in January of this year, true signal for every single ETF unless it was the Russell 2000, because the Russell 2000 showed itself to be lagging quite substantially from the other major indices. And in this last buy signal, it's been so far profitable.
On INVN, if it drops below the 50-day intraday but closes above, what do you do? Nothing, because you need, for it to be a violation, it has to first close below the 50-day, and then the next day or on ensuing days, it needs to undercut that low. So could you update us on HOG? I don't know if that we ever even dated you on it, so I'm not sure if that means we can update you on it. But there's not much going on here. I mean, you got a pocket pivot here, but it doesn't hold. Same old thing. Yeah, stock's been trying to come up, so it's acting better. Maybe because of the gas situation, people are going to buy Harleys. What is the story on GNC? It's really slow, and it's holding its viable gap up, that's all. But it's coming below the 10-day. That doesn't mean anything because it doesn't tend to hold the 10-day moving average. It seems to be stalling at 35. Did that have something to do with the secondary offer? Well, there's really no way to tell, so you don't really need to bother with it. The bottom line is it's coming off today on light volume, and it gapped up here. It's still holding it. I mean, you don't worry about the 10-day moving average, mainly because the 10-day moving average doesn't matter. So, it could pull back. It should hold above this 33 low here on the gap up day, but that's about it. MNST, I mean, we've had this thing for a while, and it acts well. It just continues to move along the 10-day moving average. Let's see. I'm not sure. You're not using. I don't think you're using the 10-day yet. It closes below. It doesn't really. It comes below just barely. It has a little porosity around there, but it's acted well, and it's not even coming off very much. Continental Resources is violating the 50-day moving average right now, so to me that would be a reason to sell it, but I don't own it, so I'm not really worried about it. There's a short sell restriction on INVN after yesterday's 10% drop. Well, that's good because I'm not trying to short it, but that's right, they do have that rule. Barron's article was negative on what? Somebody asked. Okay, we covered Biogen. I'm going to try and run through some of these. If I can use tight stops like 1 to 2%, couldn't I safely use bigger positions like 50 to 100%, or is that just nuts because of gap downs? I think 1 to 2% wiggles with big positions happen a lot, so you're just going to end up getting yourself shaken out. What I can tell you is running big positions, you kind of have to have the ability to sit through some pullbacks. You know, you can run up 30, 40% pretty quick, but you might pull back 20%. If you can't handle that, don't even go there. Does the fact that we're at the end of the first quarter have any impact on the market in general? The theory might be that you get end of the quarter window dressing, but I wouldn't really rely on anything like that. Just watch what your stocks are doing. What is the easiest way to tell what the strongest stocks are? Do you compare it to the SPY? No, why would you do that? Dr. K, you want to answer that one?
Strongest stocks. I love the
RS.
What
is the easiest way to determine what the strongest stocks are? Let's see. Eeny, meeny, miny, mo. No.
In terms of price action, it's simply RS. I love the RS indicator. It allows me to take a whole bunch of stocks. That's how I organize my list when I do a screen. I organize the list on the basis of RS from high to low. And I generally want to be focused on RS stocks above 90. Now, sometimes you have exceptional circumstances like the market's gone through a bear market, and in that case, I might relax it down to 80. But I'm really, in a good market environment, I want to have most of my stocks in my portfolio represent a relative strength of typically 93 or 94 or higher. And in some cases, I've had stocks no lower than 97 relative strength if we're in a really good market environment.
Let's see. Anything new in your upcoming Vegas seminar from last time? Something new from last time? It wouldn't be new then if it's from last time. Maybe what you mean anything different from last time. I don't know. We update the presentation to reflect newer examples, but it's going to be the same body of stuff more or less. Plus, I have some new shirts I'll be wearing, so that'll be new. How about you, Dr. K? You got any new spiffy new clothes to wear in Vegas when we're there? At the Money Show in May, which is not too far.
Yeah, I haven't thought that far ahead, but it is coming up.
Yeah, anyways. Is Fran buyable if it touches or undercuts the gap up front? Let's see, Fran. I guess it's within range of being bought. I mean, the stop is 28.50. You're at 30.44, $2. That's about 7-8%. So I guess you would say it's in range. What do you think, Dr. K?
Yeah, it's good. Buyable gap up. It's the story's it's a strong story, strong industry group. Institutions are buying into this. So it's buyable here, and you know what your downside risk is.
Yeah. Somebody asked, can you define what you mean by overhead? Overhead supply. So let's think about it this way. If you see a pattern, like let's say this is LinkedIn's weekly base. It looks a little ugly here. Let's make it look prettier. Ooh, look at how it flattens out. Isn't that cool? Looks tighter as I keep doing this. Wow, much better, much better. Okay. Over here on the left side, you can see you've had some pretty good volume and some selling off of there, and there are people who bought into this. They ended up underwater, investors rather. Well, I'm assuming they're people. They could be institutional investors as well, but they bought into it here and have held. And so as it comes back up, some of the buyers in this area, assuming they're still there, can become overhead supply in that they're coming back up even, and now they're going to unload their stock just so they can get the hell out of Dodge even, which they're happy to do after sitting through 50% drop in the stock, assuming that happened. Now, how much of that is left over in terms of people who bought there, and which would constitute those willing to sell the stock as it comes up just to get out even? Well, you can't really tell for sure, but it would seem logical that there is some overhead, and it's obvious from yesterday's action that there is in fact some overhead. So we'll see how long that takes to work itself off. But I think overall, LinkedIn looks okay, and any stock that's coming up to resistance, you can expect that it should take some time to consolidate. Sometimes they'll just blow through it, and what that tells you is that most of the buyers up in this area have already been cleaned out, or that they're not willing to sell. So that's what we mean by overhead. If Z has a pocket, would it be okay to buy even though there's no prior uptrend? Z? What is Z? Zillow. If it has a pocket, what do you mean there's no prior uptrend? You don't need a prior uptrend to buy a pocket pivot. You're thinking about a base, I guess. You have to have a prior uptrend for a base, and it does have a prior uptrend here. But it's just in this big pattern. Dr. K, anything to say about this one?
Yeah, it's a lagging stock. In this kind of market environment, I'd be focused on the stocks that are already showing true leadership, and this is not one of them. And and what I said about actually, I just wanted to correct myself on that last stock we were talking about. You know where you're going to sell. What I meant to say was you always should know exactly where you're going to get out of your position, regardless of the pattern. You must always have a sell stop in place, whether it's a mental sell stop or an actual one if you can't sit with your stocks and watch them. So I didn't want to mislead anyone into thinking, oh, well, is there times when you don't know what your sell position is, your sell stop? That's never the case. Always know your sell stop.
Somebody asks, I noticed you use a 65-day exponential moving average, but you don't have it in your charts. I don't ever have it on my charts when I'm doing these webinars, and I only use it on the short side, really. So, Amazon. You know what? I wouldn't be surprised if you see this thing go higher. I mean, I told you guys down here I wouldn't be shorting it, and I actually did buy it and play this move up here for a trade, and I'm buying it off the 200-day here with the idea that it's going to bounce off. If it doesn't hold the 200-day moving average, that might be a different issue. But stock is starting to come up. You have some overhead here, but it might hold and go higher. Again, this is a stock. I think that what I've found is these stocks coming up off the lows of their bases. We talk about FIO, but that's kind of a small stock, and it doesn't have a huge institutional following, and it's not a big stock. And I think Amazon is a big stock, and I think this is more likely to work than something like FIO, and you're seeing much better volume action in it, and it holds the 200-day pretty well on this pullback. So I kind of like it in here, and I admit that I'm nibbling on it here. But it is stalling a little bit here, so we'll just see where it goes. I'm just kind of nibbling on it. I've been playing with this on and off ever since I gave it up on the short side and forgot about trying to short it. Anyways, we're almost out of time. Ruger is just a viable gap up here, pulling back in, probably coming in within range, viable range. Looks okay. SWHC, what is that? Is that a healthcare? Whoops, I keep bringing up the wrong symbol here. Smith & Wesson. Ross Haber, who now works with us, he takes care of the Virtuous Selfish Investing Managed Accounts program. He is a gun lover. I think he has like 50 guns. And kind of odd, a nice Jewish boy from Miami. And Ross, feel free to jump in here if you want to. I know you're listening and you're out there. Nice Jewish boy from Miami ends up in Dallas, Texas, with a nice Tejano Mexican-American girlfriend out of Lubbock, Texas, and the guy's got a gun collection like nobody's business. Okay, go figure. Anyways, but he likes RGR, and he likes Smith & Wesson, and he's probably got a few of them himself, right? Right, Ross? You can feel free to hit me on a private IM if you want to. But I know he's out there. Maybe he took off. Dunkin' Donuts. Everybody loves Dunkin' Donuts, especially the police in my neighborhood. About 50-day moving average support. That looks normal on the pullback. So, but again, we already talked about this. That we're not buyers of Dunkin' Donuts. Okay, somebody's asking, would you buy? Let's see. Well, would you buy here on the pullback? I am actually buying back on the pullback, and if it keeps pulling back, I'll be able to get my full position back. But under 100, I'm a buyer, and I think your stop is like 97.10, which I think is a low of the gap up day, give or take 97.01. I'm being dyslexic again, sorry, not 97.10. And little porosity, I almost think 95. It's 5% from here. I could buy a position. That's like no problem. So maybe it doesn't hold. Maybe it keeps coming in, but we'll see. But I think I'm okay buying a position, and even if you miss the gap up, now it's coming back just like any of these other gap ups that we're talking about, and you can buy it coming in. So INBN, not marginable at my broker. You're going to get a new broker. That's all I have to say. They're marginable at Schwab. I know that much. And yep. Dr. K, do you use only a 1-year RS or also 3 months and 6 months? I think just 1 year.
Well, I generally focus just on the 1-year RS, but I do have a chart that shows me what the RS was at 3 and 6 months intervals as well. Sometimes I need a little bit added color into what I'm looking at, but in general, I just use the 1 year.
Yeah, in 2003, when I was at O'Neill still, and we were running money there, as you all know I was doing, and what we did is we actually noticed that a lot of stocks that were breaking out were actually showing low relative strengths. And so what we noticed, and this was due to the fact that the fastest movers were stocks coming off the lows after a very severe bear market from 2000 to 2002, okay? And so we started looking at 3 and 6 month relative strength just to give us a better idea of what was going on, because most of the things had come off their lows in late 2002, and so the doggy stock coming up off the lows were getting the better relative strength ratings, which was unusual thing to see in the relative strength rating, but it was a function of the severe bear market. So Lulu is something everyone asked about. You had a pocket pivot here, not holding. Any comments on this real quick, Dr. K?
Yeah, Lulu. I mean, it's been it showed exhibits signs of leadership, but it it had a good day on the earnings day a few days ago. I like upside reversals, and now it's retracing that point, but it looks to me still constructive. I mean, it's coming off on on low volume here. So if you have a position in it, I mean, it hasn't violated the 10-day. And the other thing is, if you're using the 7-week rule, then you might be you might switch to the 50-day as your guide if it violates the 10-day.
Yeah.
So
yeah,
looks all right.
What does Portfolio Simulator Dude's risk profile? It depends on how much testosterone cream he's applied to the fatty portions of his body. Nice Jewish girl in Vegas owns Smith & Wesson too. Uh-oh, there you go, Ross. No, God bless Texas. Yeah, Ross likes Dallas, surprisingly enough, but I guess Florida, I guess they're about the same. They're big flat states, so I like California myself, and I'm not leaving. The liberals from the East Coast, I know they're trying to destroy my home state, and my family's been here now for 4 generations, ever since my great-grandfather ran out of Mexico when Pancho Villa was killing Spaniards during that revolution, and I don't plan on leaving my state to the East Coast liberals just yet. Anyways, so I love California. I think Texas is a great place. I mean, probably one of the more intelligent states in terms of fiscal and tax policy. So, on the relative strength, that's we use O'Neill ratings. So I mean, we grew up on O'Neill stuff. Anyways, those are all the questions, and it was a lot. I think it was better this time to go through questions given the scariness to the market. Our take is, if you got a stock acting poorly and violating a moving average, then you cut it out. And you'll be able to tell if this turns out to be a temporary pullback. Then we tend to think that there's potential, to be buying the stronger stocks in here as they're pulling back in the logical areas, and just kind of let it play out. It may be that you get some selling for a period of time, a few days like this, without everything breaking down, or it may be that the market tops. But I think you'll need to see more breakdowns in leading stocks. And like I told you at the outset of this webinar, I'm not seeing any short sale setups. I'm not seeing anything necessarily that works on the short side. I mean, we've identified DEC before as it blew apart. It's continuing lower. That's a dog. That's one. There's your big head and shoulders. I don't see anything else really setting up that way. And I would think that if we're topping, you're going to see some action that starts to lead to these breakdowns and patterns. And the first thing you'll start to see are late-stage base failures, and a lot of times these are very severe. If we're seeing these anywhere, I remember 3 weeks ago I told you guys, maybe a month ago, I guess. Boy, time flies when you're having fun, huh? Maybe a month ago I told you guys I thought this looked very pod-like on CAT, and that might be a problem. And indeed, it is a problem because stock is starting to break down, and this almost looking like a pod breakdown. So, this is one area to be looking at, I think. I'm not sure what this means. For the market, it could just mean that we're going to rotate a little bit here, and the industrials are going to take a break. Cummins engine, same thing. Here's a breakout, and you have this big pod-like thing, big punch bowl pattern on the weekly chart, and now you're just breaking the 50 days. So theoretically, you could short this here using, I would probably say the 20-day as your stop on the upside if you think you need to be short this market. I'm not so sure. I'm not in a big hurry to make any big moves here. I'm coming back after bagging some profits a couple days ago and going to cash and then looking to come back and buy back, so I'm starting to nibble back. I'm more in a buying mood than a shorting mood. Maybe that tells you everything you need to know. Everybody should short the hell out of the market at this point. But we'll see what happens. But that's kind of my stance right now. I don't think anything here is conclusive in terms of a market top. I do think there is some argument to be made on the indexes, at least, that you're in position for a pullback, and maybe that's what the market needs because it has had quite a run. In the meantime, leading stocks and the best leading stocks will hold up, and that's what you want to keep your eye on for support as these names pull back, you know. And I'm watching some of our stocks. We own some Tango, Warango Tango, and it's, you know, it's starting to move. Looks pretty good. Big volume. Maybe it's a breakout. Anyways,
Yeah, keep in
that's
mind
all I
that
have.
keep in mind that the European stock markets have been leading the way because those are the ones with the good news or the bad news. And right now, you know, they've been trending all year higher, except the last couple of weeks they've been trending lower because I mean, in today's markets over there, there were you know, there's weak economic data, nothing groundbreaking, but because the European markets have been trending lower, I think it's just dragging the other markets down, like the U.S. market as well. But again, that's you know, European markets have gone straight up since you know, late last year, you know,
Yeah.
since
Okay.
December. So they're
One
due for,
last, Dr. K.
yeah.
One last question. I love this question. Any chance Dr. K will lead any of the webinars? Yeah, I'd like to see somebody take over some of the work here instead of leaving it all to me.
Well, when you go to the bathroom, I'll take over. How about that?
That's kind of not the, you know, it's just the format that we worked out. But the way it kind of stems from the way we used to work together at William O'Neill and Company. When we go out and see institutional clients, Dr. K would come with me as a analyst and a guy who can speak statistics to these analysts that we used to go visit at all these big institutional firms. And I would always have to be the lead-off man and the one doing most of the talking, and then I would refer to Dr. K as I needed some statistical color or, you know, something more quantitative when making an argument. And so that's the way we've always worked together. And it just kind of flows this way. And I think Dr. K prefers sitting there doing his thing, whatever he's doing, and just coming in when he's needed. So what's your take on this, Dr. K? Are you going to lead the next one, or do we stay with the format we have?
I prefer it this way because actually, while you're speaking,
There you have it.
I'm multitasking while you're doing this. So sometimes
Yeah.
that's why you might get emails in your inbox, or someone might see an email. You know, I might respond to a question that I get emails because I direct everyone into my email boxes because that works better for me.
Right. So
Yeah.
all that is to say that it's staying the way it is. Anyways, everybody, thanks for listening. We'll catch you next time. And you know where we stand on this market. We're tending to look at this as a viable pullback until further notice, okay? And that's all I've got. All right. Take care, everyone. We'll catch you next time.
Bye, everybody.